Each February, May, August, and November 15th is 13F days, so that means we get to find out what the fund managers who have over $100 million in assets have been buying that they have to disclose. And we just looked and found out what Berkshire-Hathaway has been buying. Hey, what's up? I'm Russ. This is my channel, Dapper Dividends. And if you love dividend investing, go ahead and like that sub button. And I want you to always know that with 13F filings, we have to take them with a grain of salt. Use them for idea generation to see if any of what these asset managers have been buying or selling fits in with your investing style, with your risk tolerance into your portfolio and whatnot. Because the nature of this is that they have to report 13Fs 45 days after the end of the calendar quarter. So this is what Berkshire was holding on September 30th, 2022. This is almost November 15th, so you can tell this information is pretty stale and they could have exited out of some of these positions by now. So with that being said, I'm going to get to the news blurb. I'm going to show you one powerful tool from CNBC that you can check up on the portfolio anytime you like, and then make sure you click in the description below. I'll have a link to a spreadsheet I put together, which will have the Simply Safe Dividend Safety Score, if there was one, and also the alphaspread.com intrinsic value for the base case scenario and the worst case scenarios, as well as the current stock price and dividend yields. So according to Investors Business Daily, check it out, Warren Buffett, or it could have been Todd Combs or Ted Wexler, we just don't know who bought what, but we do know what Berkshire did with their portfolio. They bought 60 million shares worth of Taiwan Semiconductor, ticker TSM, and they opened positions in Louisiana Pacific, ticker LPX, and Jefferies Financial Group, ticker JEF. When they bought 5.8 million shares of LPX and 433,000 shares of Jefferies stock. Now, they also increased their positions in Occidental Petroleum by 22%, Paramount Global by 16%, a stock I've been buying, Celanese by 6%, RH, formerly Restoration Hardware, by 8%, and Chevron, ticker CVX, by 2%. And to wrap it all up, they also bought more than 35 million shares of Occidental Petroleum, ticker OXY, and more than 12.7 million shares of Paramount, ticker PARA. Now, they completely exited Store Capital because they're going to be acquired in Q1 of 2023, so there's not much left to gain from Store Capital until then. They also reduced existing holdings in US Bank Corp by 55%, Bank of New York Mellon by 14%, and Activision Blizzard they reduced by 12%, which is interesting because Microsoft is planning to acquire them for $95 a share. They're currently trading well below that. So there was a bit of an arbitrage play that was there, and I'm curious to know, why do you think that they reduced their position in Activision? Do they maybe not think it's going to go through? And then they reduced General Motors by 5% and Kroger, ticker KR, by 4%. Now, also in the description below, you'll find this handy dandy tool on CNBC, which is part of Buffett Watch. And it is a sortable chart of the holdings that Berkshire does have. If you want to sort by percentage of portfolio, we see that Apple makes up currently 39.4% of the Berkshire portfolio. And it's just something I like to go back and check in on from time to time to see what they're holding and what the percentage of their portfolio it makes up. But it's really well put together and something that I think you should add to your tools. So there's a link to this spreadsheet in the description below, and give me a thumbs up if you find it helpful and useful. So again, you can see I broke it down into their new stakes, the raised stakes, the lowered stakes. They liquidated their stakes. Man, I'm hungry for steak. And all of the maintained stakes that they still do currently have. And if you click on this, the ticker, I have it linked to the Seeking Alpha summary page for each one of those equities. Got the current share price that should automatically populate, the annual dividend, the current dividend yield. Now, the simplysafedividends.com score that you'll see right here, some companies that don't have a dividend aren't rated, but I pulled all of this, which is a little bit pricey to new subscribers. It's $499 a year, but I love the site and I'm happy to share it with all of you. So that's what these dividend safety scores are from. And then I used alphaspread.com right in these two columns, their stock intrinsic value calculation. So we have the base case, which is about flat growth for the next 5 years, and then the worst case, which would be negative growth of about 3.75%. But as you see, I'm really digging Alpha Spread. So with Apple right here, we have the base case intrinsic value of $127.06 and the worst case of $103.24. So I went through and just plugged those into the columns for you. So this could be a helpful tool for you to just go through and kind of see what they're investing in, what might have, if you're a newer investor, a safer dividend safety score if you don't want to be too risky. Like if we see right here with Johnson & Johnson has a dividend safety score of 99, very safe. And then of course I linked to those websites, no affiliations or anything if you'd like to check them out, do a free trial, play around with each of them. A few years ago, I wrote a book called Brief Thoughts on Life, Love, and Investing. I've given that away completely free. Click that link, also found in the description below. And if you want to see a stock that I bought that Buffett owns and actually raised his stake in on Celanese, click the little video right here in the box next to my head. And if you do that, I will talk to you there.